Thanks everybody for joining. I'm Brian Smith. I lead the Jito Foundation. We have a pretty interesting episode of Midcurve or Rightcurve, if you will, for this one with Josh Lim from FalconX. And I guess maybe just kick it off, Josh. Like talk a little bit about your background in crypto and what you do today.
Yeah, hey Brian, thanks for having me. So I am the global head of markets for FalconX, and so my job is to oversee a lot of the trading, credit, electronic market making businesses within the firm. FalconX is a global prime broker that is focused on providing liquidity into crypto markets across different types of instruments. Everything from spot markets to derivatives to credit, and even providing certain pieces of infrastructure. We have like a custody and a staking business as well. Um, Most of our counterparties are hedge funds and liquid venture firms and corporate treasuries, high net worth individuals, guys and gals that are, I guess, more institutional in nature. And one of the things that we're seeing a lot more these days is obviously the intersection of CeFi and DeFi. And we view Jito as like kind of squarely in the middle of that. That's why we're very excited to be on this podcast and talk to you about it.
Yeah, and I mean for anyone who's listening and not like super in the weeds on TradFi, like can you explain in a little more simple terms, like what is a prime broker? Like what is like the biggest like trade style or something that you guys do in the prime brokerage business to make it a little more tangible?
Absolutely. So a prime broker is a term that carries over from traditional markets. It's really a couple of things, right? It's access to markets. So if you are a somebody on the buy side, meaning someone who is managing assets for clients, and your job is to figure out how to trade in different types of markets. And extract some alpha from those markets. You need a way to access them. First of all, you need to get accounts funded so that you can trade on exchanges. We all know in crypto that process is a little bit different than in traditional markets because exchanges are fully funded um, venues, right? You have to put your capital on the exchange before you can start trading on it. So there are different kind of processes that you have to go through. The onboarding is a little bit different than in traditional markets as well, and the sort of like thresholds that you need to meet to be able to trade on these venues. That's kind of where working with a platform like ours can be beneficial. We give access to people who want to just do a simple one kind of work with a single partner like us. We'll give them both access and financing on different markets, as well as access to our own principal trading business, right? So we are a dealer in some sense, meaning like we have the ability to take the other side of the trades that people want to execute in the market. And the reason they would do that with us instead of just going directly on exchange is because we have better pricing or more liquidity, more size available. Oftentimes, we're able to tap into markets that exist outside of the exchange. So, so-called OTC markets that where people trade directly with a large dealer like us. And that allows us to source risk more efficiently for the people who want to buy and sell things. It might also be that they want to trade specific assets or instruments that just aren't available on certain exchanges. So this usually happens more frequently in the derivative space, right? You want to trade like a very specific option structure. You want to buy a call spread on some asset that isn't listed anywhere. You want to hedge your book. Maybe you want to hedge like your things that are unvested, or just you want to put on a macro hedge for the whole entirety of your liquid portfolio, something like that. That's where you would kind of engage with a counterparty like us to provide that product or service to you.
And so is the dealer side of the business roughly comparable to what people think of with like a Wintermute or a DRW or a GSR, where, it's like kind of like managing risk, doing trades directly, all of that stuff?
Yeah, those are all good comps for our business. They're all firms that we respect and we do business with as well directly. But yeah, we are in the same rough category, right? I'd say every one of those firms that you mentioned has like a different strength in the market. For us, I think we've spent a lot of time building our derivatives trading business. And that's something that we feel like we have a very good and well-established like market lead on. And I think part of it is we're regulated in the US specifically, as a swap dealer, to be able to kind of like deal with more regulated counterparties in this category. We also offer like a pretty wide range of products and underliers in derivative format. So, specifically as a lot of new market entrants come in, they may not have the capability or the willingness to hold, directly on their balance sheet, or in their portfolios, crypto assets. They would rather have some synthetic market exposure to it, and that's something like we can facilitate. I'd say, in terms of the other product categories, like we do pretty much everything you would expect like a modern crypto dealer to be able to do, right? So things like electronic market making on various exchanges, whether they're CeFi or DeFi venues. We partner with a lot of protocols and L1s like yourselves in trying to figure out how to get wider market access, distribution, even sort of like enabling you know staking or sort of like running nodes or validators for certain of our network partners. But yeah, that's something where it's sort of like over time, the set of things that we do has evolved to become much more like on-chain native. And yeah, it's really good to see it because that's kind of where the market's going these days. That's what our clients are demanding.
Yeah, no, I think that's, I mean, it's interesting. And, certainly like dealer, there's like other people that say they're a dealer, but like the prime broker piece that ties it all together is quite rare in crypto. And like that is a very hard thing to build up, as we saw a lot of platforms that did some of that stuff that are no longer around us after the last cycle. And so like doing it well and having the longevity you guys have is certainly a testament to like a different level of sophistication. And I mean, is it fair, like if you're like somebody who doesn't, not in the weeds on any of this, which is actually like why I think this podcast is really valuable, because not many people understand the off-chain kind of value flows of this business. They all, you understand DeFi, like how Aave works or Camino and all of that, but like, you guys are roughly that in an off-chain context. Is that like a fair assessment on the prime broker side, where like people give you guys various collateral, it's there, and you have access to it, and you can help give more leverage, which is more capital efficient for anyone trading and cares about that stuff?
Yeah, that's right. I think one way to think about a prime broker, right, is that market access piece, which I mentioned, and the other piece is sort of financing and providing capital so that people can um, affect all the trades that they want to do while staying, relatively capital efficient. Um, I would say this, like you mentioned some of the things that happened last cycle. It's certainly something that we've seen DeFi excel at, right? DeFi has been a reliable sort of like market for a lot of people to trade and borrow and lend and do all kinds of things, access an electronic order book and things like that, even when more centralized venues and centralized counterparties were failing, right? And if we think about like why that was the case, I think it's a couple of reasons. DeFi is abides by a very constant set of rules, right? There's sort of like very consistent application of when people get liquidated. I mean, we kind of see even today, like there's a lot of action on hyperliquid. There's a lot of people punting around very large size, and those rules that dictate how those positions are managed, liquidations and margin ratios and things like that. Those are applied consistently, regardless of whether you have like $1 billion position or a $10 position, right? So that's kind of the beauty of DeFi is there's like a static set of rules that applies to everyone, and it allows everyone who participates a lot more security and comfort that like that venue is going to exist even in the most turbulent of market conditions. And that's why you see brands like Uniswap and Aave and Curve continue to exist, right? These are sort of like bedrocks of how we do business on chain. Um, Now, when I think about like the CeFi space and like what we're doing, what we want to do is offer that degree of reliability and transparency and security. We want people to feel comfortable about doing business with us. How can we do that? Like it's a matter of having the right regulatory framework in place so that people feel comfortable that we are properly have oversight over us by regulators. It's also a matter of applying, those sort of like very rigorous risk management standards that are available in DeFi venues today. And it's also a matter of going a little bit beyond that, right? I think while all of that's available through different on-chain protocols, people actually want a little bit of flexibility and customization and sort of like some bespoke product set that doesn't necessarily exist on chain. And if there were to, if someone had the idea, like, I want, some um, option structure to be available on chain, I'd like to be able to trade, knockout calls. That's a great idea, but it would take a lot of time and energy and a long build out to, create a team and go to market with it. Versus just going to a centralized dealer or counterparty like us and getting that same product and service. So there is a bit of a trade-off, right? You're facing maybe a firm that is centralized and you are sacrificing a little bit on the transparency side of things, but you get a little bit more in terms of it being regulated, and you have the ability to kind of execute things that are a little bit non-conventional and maybe a better fit for what you're trying to do from a risk management perspective.
Yeah. And I mean, I think everyone knows there's a lot of DGens on chain, right? Some like, Hyperliquid, there was, very significant position over the weekend when we were recording this and other stuff like that. I mean, how does that transfer to like the institutional space? Like, are you guys actively liquidating clients? Obviously you have to in certain circumstances, but like, what does a leverage profile look like of your customer base versus what we
Yeah.
see in the DeFi world?
Yeah, great question. Well, I think our counterparty base is a lot more institutional in nature. So it's firms that are basically professional trading firms, right? So they're either managing their own capital, in which case they would be like a proprietary firm, or client capital, which would make them like an asset manager. And they all have to meet certain regulatory thresholds for a size of, their balance sheet, and their net asset value. And because of that, right, we're able to interface with them in a different way. Like, we're able to kind of provide a much wider range of products and services because they are more sophisticated counterparties that, in theory, have the means and sort of the education to be able to put on these trades with us. We still apply, the same risk management principles, right? Like you said, there's some way we evaluate the risk of a portfolio, from the sort of like margining perspective. We have limits on how much risk we can face any single counterparty on, and those are, rules that carry over from traditional markets. A lot of our risk team are well trained, in working at banks and other prime brokers in the traditional space. But yeah, I think the main thing that makes it always so challenging in crypto is the fact that it is a lot more volatile, obviously, but it's also very 24/7, right? Like on weekends and things like that, you need to have assets and collateral and people, frankly, that are on top of things all the time. Those assets and collateral need to move at all hours of the day. And actually, this probably leads into, the other topic we want to talk on this podcast about, which is just how using assets like JitoSOL can be useful here, right? Like, it is a form of on-chain value that can be transferred very quickly and can support positions in terms of just collateral support in real time. And that's something, especially when we're doing, trades that reference Solana as the underlying asset, that's a very powerful feature.
Yeah, no, for sure. Yeah. I want to get into that in a second, but like, I think we now have a good sense of like where Valken is today. Like, when did you start trading crypto? I think you're professionally, it started in 2018 or something, but I don't know if you had a history prior to that.
Yeah, well, this firm started in that time frame. So sort of like after the first ICO bubble, and then sort of the rebuilding and the institutionalization of the asset class. I've been in the space a little bit longer than that. I actually worked at a couple of large trading firms. I was at Circle, which of course now is very close to reaching an IPO. Back in the day, I was in their treasury team managing their Bitcoin reserves. As back then it was a company that was focused on providing payment services, so it was using Bitcoin and other crypto assets for transfers. Um, and then I was at Galaxy for a while as well, helping to run like the spot and derivatives trading businesses there. Was at Genesis for a bit as well to start the derivatives business and run that for a couple of years. And then since then, I ran a small kind of prop trading business called Arbalest Markets, which was subsequently acquired by FalconX.
Yeah, yeah. Congrats. That was this winter, right?
That's right. It was January of this year.
Yeah. Yeah. So I mean, but you've seen a lot of crypto's history. I mean, just curious how the market structure has evolved of kind of, off-chain entities like, Circle was like kind of the OG and like spawned a lot of actually this activity back in the day.
Right.
And like what has changed, what hasn't, and kind of what is the magnitude of these businesses
Yeah.
now compared to where it used to be.
Yeah, for sure. I would say the biggest change, right, is just evolving from like a retail driven market to one that's run by institutional investors, right? I think you could kind of see it too in the character of some of these cycles that we've been through. Previous cycles, you saw a lot more. I would say euphoria, right? And altcoins, NFTs were such a big thing in the last cycle. Those are very much like retail driven, sort of consumer driven apps and like you know speculative categories, I would say. But like in this cycle, so much of the attention is going towards like ETF products, or more recently it's these sort of like SPACs and private investments in public equities, these types of equitized versions of crypto, right? And it creates a very different dynamic, right? Like nowadays you have capital that flows into these sort of closed boxes. Like you could think of an ETF as really just a way to absorb a lot of dollar capital that's flowing into crypto, and then the Bitcoin kind of sits there, right? The Bitcoin sits in custody typically at like a major custodian. Sure, the ETF wrapper is sort of usable in other formats. It can sit in a brokerage account. You could, trade options on IBIT against your ETF holdings, things like that. But it doesn't get recirculated. Like the capital doesn't flow back into altcoin markets like it did in previous cycles. And then couple that with the fact that the financing markets in crypto have really changed as well. There used to be a lot more platforms that would transform retail deposits into basically like leverage, right? For the trading firms in the space. And that was arguably a pretty bad thing to have in our industry. So this cycle is built on a much more sound foundation, right? It's really real cash coming into the space and going into things like corporate treasuries and ETFs. But it does change the character of the rally, right? It makes it, even though we're really at all-time highs, right, in crypto, in Bitcoin, you don't feel the same degree of euphoria that we felt in previous cycles. And that's, you look at a chart of any random alt, like we're well off the highs, right? We're probably kind of squarely in the middle of the range for most alts. You look at Bitcoin dominance, it's like 67%, right? It's almost near kind of like the resistance levels that it usually gets to in previous cycles, right? Like 70%, right? So but I think it's a process. Like there's sort of this like capital distribution process. We're starting to see a little bit of a shift there. If you look at what types of products, new products are launching and attracting capital, you're seeing some of these new equity type instruments for crypto on Solana, on ETH. I'm sure we will see at some point, an ETF that embeds staking in it. That's a big focus for you guys. All of these things take a little bit of time, but right now, the vast amount of attention is really on like Bitcoin as a store of value.
Yeah. And I mean, do you think the current structure, right? I mean, ETFs are one-to-one on leverage vehicles. Um, Retail is probably the end consumer of most of the ETFs, at least in people that have like a medium to long-term time horizon in it. So, I mean, is it really just like the lack of the leverage in this and the difficulty of doing it that you think is somewhat suppressing the volatility in the cycle that's driven, by BTC price?
I think it's that, but it's also just the fact that it's driven by cash, right? So there is, generally speaking, just a lot less leverage built up in the system. In a lot of ways, this is what like it would have, if you think about where we would have been price level wise last cycle without the leverage, it would have been lower than where we are today, right? So it's like in some ways, we were higher, we're sort of reclaimed like levels of last cycle, but really it would have taken a lot more time to get to this price point if we hadn't had all the extra leverage from last cycle. Um, I would say like we're we're evolving in a direction where like the types of people that are actively trading are not necessarily looking for like huge convex type of bets all the time, and that was like definitely true of the previous cycles. Like a lot of people are just thinking about Bitcoin as a inflation hedge, and they're really happy if it can hold value in the same way that gold can, which gold, I mean, gold's having a standout year, a couple of years here, but it's not something that you would expect to like 5x in any given year, right? So I mean that is what Bitcoin did, like a couple of I guess like off the 2022 lows, right? So uh yeah, it's I think we're at a point now where the character of like the user of this asset class, the median user of this asset class, is much more focused on, digital store of value, like the narrative of like there needs to be some version of gold that exists in like a digital world, and what is that asset? It's gold, or it's Bitcoin, right? So yeah, that's kind of where things are headed.
Yeah. I mean, is there any hopium you can give to like the average crypto degen that has, a big bag of shitcoins that are like nowhere close to the prices they would like them at, about like why TradFi adopting crypto ETFs, all of the SOL vehicles, like why that could end up saving some of their bags?
Sure. Well, look, the good news for most people is that there is like this winnowing happening, right, between good assets and bad assets. And like if you think about the themes in crypto Twitter like earlier this year, a lot of it was this narrative of, low float, high FTV tokens bad, uh, you know, tokens that have very kind of like manufactured price charts, post TGE being bad, right? Like all these sort of like discussions around how liquidity flows into these altcoins and who are the main market participants on these tokens, right? Um, that is good, right? It's good to have that sort of like self-governance of what should this asset class look like, um, and allow the sort of degree of innovation and sort of like permissionless creativity that is really like why we're all in crypto, right? We love that sort of dynamism in our industry, but with the sort of like sense of ethics and consumer protection even that we all take for granted in traditional markets, right? So I kind of think that that's one positive that's coming out of it. I think the other thing is, okay, so the question is like, okay, is there hope for the wide swath of altcoins? I think if it's hard because everyone kind of believes that their own token has some value and some utility, and it's will survive long term. If you genuinely believe that, right, and you're building applications that will have some durability, then yeah, I mean, there's obviously hope. Like, I think it's either through the sort of natural value accrual mechanisms that these tokens have, whether it's like buybacks or some kind of like fee switch. There's so many of these things that are considered like fundamental assets now. Like you talk to hedge fund managers in the space now, it's a whole different vocabulary, right, that people are using when they talk about what types of assets they're holding in their portfolio. It's really focused on actual KPIs and metrics, and there's a whole slew of good like data companies, like information, kind of like the Bloombergs of crypto type companies that really provide all these fundamental metrics for tokens now to evaluate, is there sufficient traction and fee generation and all that kind of stuff to support the valuations that these things are trading at. So yeah, I mean, that's the upside, right? If you're good at that type of analysis and you have that sort of like training and you're used to sort of that type of um analysis in traditional markets, like it's now very applicable in crypto.
Yeah, no, I mean, I was a fundamental analyst at a hedge fund for 7 years, and so like all of the like liquid funds talking about it. I mean, it's definitely refreshing to hear people care about these things, and frankly, like the market has just gotten more efficient. I mean, I think there's some undervalued tokens because there's like zero retail bid, but like a lot of the prior era. I mean, I own plenty of the Stam coins back in 21, and like the valuations they were trading at are fucking bananas in hindsight. So like I learned my
Yeah.
lesson and like more thoughtful about that stuff. And hopefully it means that there is more sustainable foundations for crypto, that people aren't just kind of getting rugged on these things that have no future. But I mean, I guess the counterpoint to all of that is like the only non-Bitcoin tokens that are topical now, outside of like arguably Solana, are meme coins, which have zero of that. Like, do you guys touch any of the meme coins? Like, what is the view of TradFi about these tokens?
Yeah. I don't know if I can speak for all of TradFi, right? But from my perspective, these trade like derivatives, right? So everything is a meme and it's a meme on something, right? There's some probably correlated asset that is maybe like a more fundamental asset, like has some value accrual to it. And that fundamental asset sometimes can just be like the gas token of the L1 that that meme trades on, right? And so, yeah, like the things that get a lot of attention are, you know, driving more activity to that L1, and it's sort of like a creates a flywheel, right? And people start to do more activity there. They start to use, the DEXs on there, and they start to stake on there and generate yield. And that's how these things ultimately trade as well, right? So it's sort of very, very cyclical, very sort of like momentum and retail reflexivity driven. So I mean, frankly, like if you're good at trading, equity meme stocks, right? And I think there's a whole generation of us that grew up being familiar with like GameStop and then like all the kind of like new equities that have emerged in different categories. Now it's like the quantum stocks are really hot, right? Like everyone kind of trades these things. I think that sort of trading dynamic is how applies to meme coins. And if you have a very keen sense of like human psychology and that sort of reflexivity cycle, you would be that's how I've seen like the most successful people treat these meme coins. It's just a way to get almost like extra leverage in a derivative format to some underlying theme or narrative.
Yeah, no, that's pretty interesting. Uh, I mean, do you think there's anything durable in kind of the new batch, right? I mean, you've been around. You saw Doge like stick around forever.
Yeah,
Um,
totally.
it's like unkillable, which is interesting, and it feels like that's like kind of impossible now when there's like 10,000 on Solana per day.
Yeah.
But maybe not.
Yeah. The stuff that tends to have the most staying power is like the things that are on their face like very hard to accept as something that could have value, because like basically the reason things go up is because there's marginal buyers, right? So like the more people, it's like the larger the asset class, and meaning like the more eyeballs on it, and then the more sort of like the higher the fraction of those eyeballs that are kind of in disbelief of something, then there's like room to go higher. It's like things like fart coin, right? It's like that has such a mimetic value because your initial instinct is to be like very dismissive of it. And I think that it worked to its great effect, right, for this particular asset because so many people came in and were like, okay, my initial instinct is to hate this thing, which means I need to buy it because
Yeah.
like there's going to be so many marginal buyers that get in too late. So yeah, I think that's kind of that's one way to think about it, I suppose.
No, that's a good mindset. If you hate
Yeah,
it, you should buy it.
exactly.
Or if you hate it and it's outperforming for some reason, then worth taking a second look.
That's right.
But anyways, yeah, I mean, I think let's talk Solana. So, you guys very involved in Solana. We have a partnership. We'll get to it in a second. But like, what is, I'm biased, but Solana's been having a really special 2 years. Like, what does you guys view just from talking to different TradFi people, outside audiences, and seeing those markets of like how Solana perception is going?
Yeah, yeah. I mean, I think before this latest sort of ETH resurgence off the lows, right? It was sort of like Solana was second in mind share after Bitcoin. And for most people, those two things occupy pretty different categories, right? Bitcoin commands like a bit of a monetary premium as this sort of store of value asset. And in that lane, it's pretty much unchallenged. And anything that tries to become that is not will almost certainly not succeed, right? And I think like that's where things like Ethereum, when it went into a sort of like ultrasound money phase, kind of went off the tracks a little bit, right? Like they should have kind of stuck with the sort of global distributed computer type narrative, which I think Solana did a masterful job of just like capturing that and making that its whole thing. And so that's kind of the perception, right, in the institutional landscape is like Solana's kind of established itself as a winner here. And not only that, but it sort of established itself also in the hearts and minds of a lot of retail users, right, through the meme coin craze and all the liquidity that comes with it. Winning sort of, I guess, winning the Trump token in some sense was a huge coup as well, right? Like you saw that whole run up to 290 going into the launch of Trump meme coin it was entirely because of that, right? Because of the sheer amount of new users coming in and buying the token and maybe even being exposed to Solana for the first time. So yeah, just so much. Yeah, so much interest from almost every corner. There were many days where Solana was maybe one of the most actively traded assets on our desk, even in excess of Ethereum, but sometimes even rivaling, our Bitcoin volumes. And it is one of these things where there were a lot of very special opportunities going on in this asset, right? Particularly post FTX liquidation. There were, I mean, the asset was almost left for dead for a little bit. There was a lot of people who had locked tokens in it that needed to liquidate it. So there was this wholesale kind of, turnover in shareholder base, if you will, that happened, and it created just so many opportunities for people to create value for their investors by picking it up and really like believing in it before the growth metrics really shone through on it. So yeah, I think that's kind of where we're at now, right? It's sort of now the question is like, how does it kind of sustain that advantage? Does the kind of like meme coin uh, substrate kind of nature of Solana become a problem for it in the long run? Like, does it create a lot of overhang and things like that? And there was a little bit of a blowback, right, after the whole kind of pump.fun era exploded, where people were very concerned about, retail losing money buying into these things. And does that create like a sour experience on the whole on the whole L1? But I think what really came out of it was that people saw how easy it was to use, right? And the utility of it and the sort of like great CX of it kind of overrode all of that other stuff. So I think that's what we're seeing now.
Yeah, I mean, it's like a lot of meetings you hear people say like, "Oh, Solana's only for meme coins," and it's like, well, no, like that
Yeah,
actually is the most performant network of any L1 or L2 at the moment.
that's right. Yeah.
And there's a lot of other stuff simultaneously happening, like completely unaffected by meme coins, which is like a miraculous engineering achievement. But like obviously the meme coins are going to get the headlines, and so like just because it's not on the front page of Bloomberg or whatever, it doesn't mean there's not other things happening with the network. And meme coins are really just a proof of concept that it is actually an incredible chain for users to interact with, whether they're trading, whether it's TradFi, using some activities on chain for it. Like it, we found a lot of bugs with the meme coin experience because it's hard to think of a more um, battle testing ground than like a billion retail people that have no idea what they're doing, just like setting up bots to spam the network. And the level of like transaction activity is tough. So I think that's what's like bullish about it. And I mean, I guess you mentioned like some interesting trades there. It's like not leaking any current alpha or anything, but like what is the type of activity in Solana that you guys are facilitating at FalconX?
Yeah, totally. Well, Solana has, um, because it is very liquid and it is actually a very high vol asset, there's an attractive way for holders of the token, long-term holders, to monetize it, right? Which is basically to sell options on the asset. We see a lot of people who intend to hold it, long-term. They're willing to sell call options that are pretty far out of the money, let's say like $250 strikes or more, where they're willing to sell the token up there, but at this current price, like maybe not, right? But they're willing to sort of monetize it if it ever gets up there. And the way you monetize it is by selling some kind of call option. You collect a premium up front, and that gives you some yield on an ongoing basis as long as the token doesn't trade to that level, right? So that's something that we're seeing. That's like a very common strategy called call overriding or covered calls. Another idea that people have is, if your thought is, over time, this asset becomes much more mature and it becomes more stable as an asset that has, isn't really in price discovery mode anymore. Kind of people have an idea of where supply and demand is. Then you want to sort of make a bet that it's going to stay in a tight range, right? So there's a lot of interesting option structures that you can trade there. You could buy, you could sell puts and calls at the same time, which means you're making some kind of bet that it stays within a tight range. There's also more complex versions of that, right? You could sell like one touch, options where you're making a bet that it doesn't trade at a certain price level ever over the life of that
Mm,
option. Um, Things like that. Those all tend to be what are called short vol trades. So you're making a bet that the volatility of that asset is going down over time, which means it'll become more stable. So yeah, we're seeing, and then obviously like there's even more complex things. Like you could take Solana and compare it to Ethereum, or you could compare it to XRP, or take whatever asset you want, right? And you could do like a spread between those two assets, right? You could go long one, you could go short the other. You could certainly implement that in derivative format, to put a little bit of leverage on that ratio, because that ratio will tend to be more less volatile than just being long or short Solana versus dollars, right? So because everything has a correlation to Bitcoin effectively. So yeah, that those are some of the trades that we see in the space, and it's sort of getting it more and more complex over time. Like people are asking for more complicated structures. Even like the we talked a little bit about the meme coins. Like people ask about things like the major sort of meme coins on Solana, things like Bonk, and you would be surprised how many people are quoting options on the sort of like even lesser known meme coins. So it's, yeah, it's something that not everyone can quote, and obviously it's not like the most liquid thing in the world, but it's something that we try to offer to people who ask for
yeah, no, that's a lot of embedded volatility.
it for sure.
Leverage on a meme coin or options. But I mean, what is the covered call like? Say you're running the conservative strategy. What is the annualized yield today on doing that?
Um, yeah, so it really depends on the maturity and the strike, and also just the day-to-day market conditions, right? I'd say like a lot of things, if you're doing call options on let's say like a Bitcoin, which is a much lower vol asset, you shouldn't probably expect a lot more than, let's say, like 20% per annum or something like that. If you're writing options on a 1 to 3 month basis that are slightly out of the money. If you're doing it on something higher volatility like Solana, right, it could get as high as, depending on how you structure it, maybe something like 30 to 40% per annum. You are giving something up in this structure, right? As we said earlier, like you're if it goes above the strike of the call options that you're selling, you no longer have exposure to Solana. So you have to be willing to sell at some price, and if you do, then there's some juicy yields there.
Yeah, which is strange because there was like, I mean, this was all the rage in the 21, 22 cycle. There was like, 5 different vaults on Solana alone that like ran this strategy. And like none of the DeFi vehicles to access this, which is, better for retail because it's like hard to reason about this for retail, have come back.
Yeah.
And I don't really know why. But I mean, most of them didn't end well, but like the products worked as intended. Like, they either hit the strike or the put, and they were monetized.
Yeah, it's a really good question. I mean, I think part of it is, some of these trades are going off chain, right? Like they're just trading versus dealers, or, on venues like Deribit. I also think uh like one thing you mentioned, which is like, some people got burned on these types of trades, is definitely true. And we did see like a number of these platforms, even the ones that I thought were very, very good ones, well designed consumer products on Solana, um, kind of disappear after the end of the cycle, which was very sad. But yeah, I think it is very cyclical. Like this type of thing. Uh, is very dependent on where we are in the market cycle, right? Like usually this type of overriding yield generation impulse happens like mid to late cycle, because people are less concerned about, the next like 2, 3, 4x in the asset that they're holding, and they're just trying to sort of like get some ongoing income from holding that asset. So we haven't really seen that, right? Like I guess here's one data point, right? Like we haven't seen a lot of people come in to do the basis trade, partially because like that basis the basis trade, meaning like selling forwards versus buying spot. That basis yield is very low right now, because most of the demand coming into crypto is really just buying spot. Like there's not a lot of leverage building up in the system, which means that basis spread is pretty compressed. So because of that, there just hasn't been a lot of attention in these sort of like yield generation strategies. I would estimate, right, if like the basis trade went up and if there was a lot more demand for leverage in the system, which is kind of what happens, right, like mid to late cycle, then you would see a resurgence in these types of like overriding strategies as well.
Yeah, yeah, no, it's been interesting, and to what extent, as there's more Solana vehicles coming out, like what you talked about earlier with Bitcoin, if the
Yeah.
volatility that is somewhat attractive to a lot of Solana holders today, kind of just structurally declines. But we'll see.
Yeah.
So, anyways, I mean, how does JitoSOL fit into some of the trading strategies that you're talking about, and kind of maybe just like give some context on kind of why you guys decided to start working with JitoSOL.
Yeah. Well, let me take a step back. Like one of our key ideas as a firm is we want to partner with ecosystems and protocols and builders that we think are fundamental to the growth of the ecosystem long term. So we actually want to partner with durable projects, right? Projects that we can really support wholeheartedly as a brand and as a product. And I think Judo is like one of the strongest examples of that type of category of product leader, category leader. I would say another feature, right? Just the inherent kind of feature of JitoSOL as a product is that it is very portable and it's very usable as collateral, while maintaining a high degree of capital efficiency. And what I mean by that is you can hold the asset. It retains all of the risk properties that you want, right? It has the exposure to Solana. It has the embedded staking yield, and even more than just like the native staking yield, right? And it also is usable. You can send it to exchanges. Like for instance, we were involved with the listing of this asset on OKX, and it's widely available across a bunch of different dexes as well, right? So it has that liquidity, it has that sort of portability, and then once you throw in a couple of the large kind of market participants who are actively holding Solana and want to stake it and want to get that yield and also want to do a lot of trading activity using that asset as a collateral asset, then you have a lot more utility. And so that's where we kind of came in, and we talked about uh, using this asset as a collateral asset against, for instance, our lending business, especially when we are lending, correlated assets to that form of collateral. Similarly, on our derivative trading business, it's usable as a form of collateral against, derivative positions that have short Solana exposure. It's a natural form of collateral in that sense because it provides the same the right risk characteristic, right? If you're short call options on Solana, for instance, you'd want Solana as collateral because your collateral appreciates when those calls become more valuable. And so that's a thing that I think is going to become more widely applicable, not just uh, in Solana, but just in every asset in crypto where there's a demand for yield and capital efficiency, but also for the appropriate form of collateral and the sort of immediacy of like transferring that collateral at any time with the power of moving things on chain, right? So yeah, those are the main reasons.
Yeah, yeah. I mean, all of it kind of evolved with Bitcoin, which obviously doesn't have this problem. And so it was much simpler to all just use Bitcoin for any of the trading business before. But now that you do have yield bearing assets, right, you're getting diluted roughly 8% a year if you're using unstaked SOL for anything. And so there's a real cost to that for anyone who has a time horizon beyond a couple days. Uh, and
Yeah.
I guess like is that an is that a naive way to think about the benefit of JitoSOL is like for your clients, they're getting roughly 8%, 10% earlier this year, depending on what network activity is of like yield uplift, or given the leverage profile and some of the more exotic structures that like it's actually magnified.
Yeah, I mean, I think that's the easiest way to quantify the sort of like opportunity cost of not using it, right? I would say uh, it's oftentimes like one of these things in crypto that is an afterthought, right, for most people because uh, we lived through a couple cycles where things went up and down 10x in a cycle, and that was, there was just a unique focus on price appreciation as the means of getting a return. And now, like we've said many times so far, is like as things mature and they become a little bit more boring, there's so much more focus on the total return, like the yield, the embedded yield, and things like that that you need to really drive like outperformance relative to your peers, relative to the market. There's just going to be so much demand on this type of instrument.
Yeah. And I mean, are you seeing still predominantly spot SOL in your business, or is the migration already somewhat happening to like JitoSOL for those clients?
I think it's like a mix right now. I think it's a little bit of an awareness and education process too, with a lot of market participants. I mean, just thinking about who the largest holders of these major assets tend to be like more. Like more traditional market participants that come from other asset classes that maybe aren't as comfortable like with on-chain activity. And so it does take a little bit of time, right, to get people sort of up to speed on what you can do with your asset. And then there is a large lift in terms of security, operations, compliance, and regulatory questions that need to be answered. So, yeah, all of those things come into play when it comes to like these larger asset managers that need to make a decision on how to hold their funds. So, yeah, it's not immediate for sure, but it's like we're definitely at the early stages of it.
Yeah, yeah, and I think my last question is just like, we're obviously early stages of where Solana goes in more traditional rails. I mean, I think ETF for Solana is top of mind for everyone. Staking component certainly relevant there. How do you see ETF stuff proceeding through the rest of this year, and kind of what role do staked assets have in that?
Yeah, I mean, I think we've all been sequentially surprised in the industry, right? As like each new launch happens. I think I remember when they announced the ETH ETF, that was like a big sort of market was way mispriced for that. I think on Polymarket it was priced at like 10% or something like that. So yeah, I mean, I kind of expect that to keep happening, right? It's gonna happen, right? Regardless of whether people price it in or not. Um, a lot of these sort of more mature assets are going to have ETF listings, and really, once these things get to a certain scale, the amount of like income that is going to be forgone by not having these be staked is going to be so enormous, right? That these are no longer going to be like it's not gonna be a question, right? You have to have some embedded staking component to be able to even track your asset. So I do think, yeah, like I think that's something that will happen over time. In terms of just like when, right? I mean, we are living in a little bit of a window here where we have a great administration that is very friendly towards crypto, and the regulators have demonstrated time and time again now that they are much more progressive when it comes to crypto and thinking about innovation in the space. So yeah, I expect it to happen, at some point. If not this year, early next year, where some of these products come out with staking, and including newer maybe even on Solana.
Yeah, yeah, for sure. Hopefully sooner rather than later. But yeah, anything else you want to shout out that we haven't covered yet?
Um, No, I think we're just really glad that we can support something like this. I think it's something that is uniquely at the intersection, like I said, of DeFi and on-chain finance with traditional markets. And please, if anyone is interested in kind of like getting a little bit more educated about what is possible, definitely reach out to us or to your team, and we can sort of discuss like all of the different ways that you can preserve that sort of capital efficiency and get more use and utility from the assets you hold on your balance sheet.
Yeah, no, for sure. So, all right. Well, thanks for the time, and hope everyone enjoyed kind of learning about what is an opaque corner of the space, but very, very
Mhm.
important. So, appreciate it.
Yeah, definitely. Thanks for having me.
Yeah.